Hi there, this is Russ Horn, and today I want to show you the 1, 2, 3 chart pattern. This may be the most underused, powerful tool in Forex trading. It is a very simple chart formation, and it shows up all over the place. We have an opportunity to trade the 1, 2, 3 pattern over and over again. I think because of its simple nature, though, traders tend to overlook it, and they really shouldn't, and I'll show you why. First of all, I'll explain the 1, 2, 3 chart pattern itself. We've got a bullish pattern and a bearish pattern. And the formation of this, again, it's really, really simple. We get a market movement starting at point 1, moving up, getting to point 2 where it changes direction, and then comes down to point 3, where at that point it turns back up. Now, what's important about point 3 is that it does not get lower than point 1. And that's what this red line on the graphic depicts. Point 1, point 2, point 3, that is not as low as point 1. And then it takes off to go upwards. And as soon as it breaks that point 2 area of resistance, we can place a buy trade. So as soon as it tags 1 pip above point 2, we can go long. And generally how this is traded is the stop loss will go underneath point 3 and our take profit would be 1 to 1. So whatever the distance is between our entry and point 3, we would aim for as a target. Let's take a look at an example of that on the chart. And I'll just mark off with the numbers here. So I'll duplicate these numbers. We've got a point 1, a point 2, and a point 3. And I'll mark off the level where we enter. So point 1, point 2, point 3, which is higher than point 1. Price touches just above point 2, about a pip, and then the market takes off. It continues in that direction. Now the market moves in a stair-step fashion, and that's what we're taking advantage of. We're taking advantage of the upward stair-step fashion, and for the bullish formation, we're taking advantage of the downwards stair-step fashion. Now another example of this is in the same pattern here, just a little bit wider. Now that's a bullish. Take a look at another example of this here. 1, 2, 3. And the line across number 2 to give us the entry. So we've got 1, 2, 3, 3 being higher than 1. Once we get 1 pip above number 2, or that area of resistance, we can go long. Let's take a look at the bearish version. The bearish version is identical, only upside down to the bullish one. So we've got a leg that moves down from point 1 to 2, and then moves up to point 3, which is lower than point 1. And then when we break below point 2, we can place a sell order. So 1 pip below the area of support of point 2 would be our signal to go short. So let's look at an example of that on the chart. This is a bigger chart movement, and we can use this one here. So I'll go point 1, ran out of space there, is the top. Point 1 is the top. Point 2 is this swing low. Point 3 is the lower high, lower than point 1. And I'll mark off the bottom for point 2, extend that out a little bit. And then our entry would be 1 pip below point 2. And our stop goes above point 3. Our target is the same distance as from the entry to point 3. So another example of that could be right here. Point 1, point 2, point 3, And our entry would be right here when we get 1 pip below the 0.2 area of support. 1, 2, 3, and then once we break below, we get a move, which sometimes would be considered 0.4. This is a really powerful formation, and I really want you to take advantage of this. Please take a look for it on your charts, and if you can, trade it. Try it on a demo for a little bit. This is a great formation. You're going to see it all over the place, and there's no point leaving that money on the table.